So at the moment, the stock market is absolutely exploding. A lot of my stocks are doing really well as well at the moment. And I've had a lot of you guys ask what's next for these stocks with them being up so much. So we're going to talk about a few stocks in particular. We're going to talk about the market. Is the market getting a little bit overvalued at the moment? Since we had the stock market flash crash a couple of weeks ago, the stock market has been on an absolute rally, and I saw on CNBC News just as before recording this video, like they were talking like the stock market's been on a 9-day streak, so we'll talk about that as well. So yeah, a lot of stocks we're going to talk about today, guys. Hope you enjoy the video. Let's get started. So when you look at the stock market, the S&P is having a cracking 5 days, up 2. It was actually up a little bit more, just pulled back a little bit, up 2.8%. And all small caps as well. The small caps are going up as well. The S&P 600 is having a good time as well, up 4.1% in the last 5 days. So the stock market is having a fantastic run at the moment. Now a lot of people are looking on Friday when we are going to get some comments from Powell. A lot of people are talking about that when he's going to be talking doing a Jackson Hole speech. We'll see what happens there. But when we get onto the individual stocks, I was going to start through the individual stocks and then I'll get onto a market as a whole towards the end of the video. But individual stock wise, wow, there's so many stocks doing well at the moment. My portfolio is absolutely firing, and a lot of these stocks have been doing absolutely amazing. I've had a lot of messages about each one of these stocks. I was thinking of giving them their own kind of video, and I thought, you know what, there's just so many of them, I'm going to squeeze them all in one video, and then maybe tomorrow I might do a full video on maybe like Card Factory or PayPal or Sofi or something like that. We'll see. First one, Card Factory. I had a lot of questions about Card Factory. Wow, it's one of those. I think I said this on the stocks I'm buying video series that I did like a week ago, 2 weeks ago. Sometimes the stock market can just be so stagnant or individual stocks can be just so stagnant for like months, and you're like, oh, this is boring. Why am I investing here? It doesn't do anything, and it comes a real big test of your patience. Now, for a lot of you guys that have been in the market for a long time, you know, you get used to this. You get used to like, I'm not worried about it. I'm a long-term investor. In the long term, the share prices will reflect the financials. And that's what's happened with Card Factory in the last kind of couple of weeks. And sometimes it can stay stagnant for such a long time, like, oh, will you do something? And I saw it in the YouTube videos. I had people saying, why buy Card Factory? It's not done anything. There was people even on the Discord, which by the way you can join with a link in the description, 2 exclusive videos a week on there. Even people on the Discord were saying like, this is getting a bit ridiculous. Like, it's not done anything for such a long period of time. I mean, I've got 3 months on the chart here. Realistically, it's not even been 3 months where it's not done anything. It's basically been like a year and a half where it has kind of, you know, it hasn't really done anything. And then, you know, you can blink and then boom, you miss it. And this is why you can't time the market, guys. You know, boom, look at that. The stock is up over 40%. Now you can kind of pinpoint that there was a big seller, a big institution that was releasing a lot of shares in Card Factory, and that's suddenly why the rally has gone on potentially, and you can try pinpoint it. But that's the thing, is like, who knew that was going to be the exact point where, you know, the stock goes on to rally, and you know, you blink and then boom, you're up 40% on Card Factory. Absolutely amazing. And this is one that isn't a surprise. Like, it was obvious. This is, I mean, how many times has this been on the YouTube channel? Like, I've been saying Card Factory is a good opportunity, guys. It's a good opportunity. And then you know, fair enough, you know, you have to sit there for a couple of months without doing anything, and then boom, you know, 40% up in a month, 2 month period. It's absolutely amazing, isn't it? So Card Factory, I mean, it's once again, it's been on another good run, and it's funny how the stock just stays stagnant and it just has that big explosion. I remember when we were talking about it in 2020, and then it woke up and it went on a massive run, stayed a bit, it even went down a little bit, to be fair, during 2022, and I was like, okay, I've got another chance to buy Card Factory. I'm going to average up again, and then boom, and then we've had it same again where I've gone, okay, you know, the financials just keep improving and the valuation stays the same, and then we get the lift up. A few people have asked me like, is there a point where I sell Card Factory? And at the moment, not yet. It's still 9 times earnings. I think it should be higher than that because it's a good business. You look at what it normally used to trade at. It normally traded at 11 times earnings, so it's below its historic average. And as well as that, you've got to remember, like, this company is in the best shape it's ever been under the new CEO. Well, I say new CEO, he's been there for 2 years now. The growth story is very good. The profitability is very good, apart from obviously a little bit of a dip at the moment because of the big increase in the national wage and a few other things going on, the tax increase in the UK at the moment. So there's a couple of short-term issues why the profit has kind of stagnated a little bit. Hopefully we don't have anything ridiculous. Well, you never know under Labour, but maybe in the next kind of couple of years, if the profit keeps on doing what it's doing. I mean, analysts are forecasting big growth. I was only forecasting like 3-4% in Card Factory. Analysts are like 7-8% growth, which is, whoa, that's a pretty. If this grows at 7-8%, I mean, I don't even think 11 times earnings a fair valuation. I'd be trading at like 14 times earnings. But as well as that, the company was very low on cash previously. It was a bit like flirting a bit with I won't say bankruptcy, but it was a little bit worrying at times. They only had like 3-4 million in the bank. Nowadays, the company's got double that, nearly triple that, and the debt has gone from 60, 70, 8% debt to equity. Nearly 140, 160 million of debt on that balance sheet, and now it's sitting on 45 million, so it's in a very healthy place. And dividend wise, Google still hasn't picked up the dividend that's come back. I'm going to be picking even more than that. I'm going to be picking up a 7% dividend on 8% dividend on the cost basis that I have on Card Factory. I'm going to get like nearly the S&P's 500's return on Card Factory on a dividend alone. So there's no rush for me to really sell, and that dividend as well. I don't think they've actually picked the number up on the Simple Wall Street, because I don't think even they've picked up the dividend. Oh yeah, they have actually. Wow, that's impressive. But you look at the dividend, they're only paying like 31% of their earnings out. Like realistically, this should probably get towards like 50% payout rate. So yeah, the dividend as well is probably got potential to get ramped up in the next couple of years as well. So yeah, it's I'm definitely not, put it this way, I'm closer to buying than selling. And that's where I'm at with that one. Supreme, another stock that's done absolutely amazing. At the moment, we're up 72% year to date on this stock. Same again, a few people saying about selling this stock. The difference with Supreme is that it's just run up so much. I have taken a little bit of profit off the table. Nothing too much. I still own most of my position on Supreme, but I made really good amounts of money. I thought, what, if there's any bit of pullback, I'll be happy that I took a little bit of profit at the table. But apart from that, I still think Supreme has big room to carry on, growing in a very good direction on the share price point of view. The story of profit and revenue from this has been absolutely amazing. You've got a clean balance sheet from these guys. Same again, you look at the dividend, they've got room to probably ramp up that dividend even more than what they're currently doing at the moment. We talked about Card Factory having room to carry on increasing the dividend. Supreme are only paying 25% out at the moment, and I think when Supreme IPO'd in 2021, I think I had it up here, but where is it at? It's on the valuation basis. Yeah, so they IPO'd in 2021, and at that point they went to like 20 times earnings, and then realistically it sunk into incredible levels back in 2022, 2021. That's why I started buying the stock. But for a company like this, same again, I think that 10 times earnings, I don't know if it's a little bit too low at the moment. The CEO, the management team seems to know what they're doing over there. I just think I'll let it carry on running at the moment. I think I've got no plans to sell that one. Aviva, what a secret stock this has been in the background. I wish I bought a little bit more of Aviva. It's funny, isn't it? In the time, you're like, do I carry on buying any more? I don't know. And then when it starts going up, you're like, I wish I bought more of that stock. That's the classic one with Aviva. But this is supposed to be a boring stock. I decided to get a little bit more dividend exposure into the portfolio about 2 years ago. I went, I want a bit more dividend exposure. And I did a lot of that through the UK portfolio rather than the US portfolio, just because the growth opportunities in the US, in my opinion, are a lot better. Whereas a lot of the dividend players are a lot more attractive in the UK, in my opinion. That's why we saw the likes of Card Factory come into the portfolio, Supreme come into the portfolio. But Aviva as well, these are supposed to be boring stocks, aren't they? The UK is supposed to be dead. Why invest in the UK? And then you have Card Factory smashing it, and Supreme smashing it, and Aviva now smashing it. And this is supposed to be a dividend stock, and yet in the last year it's up 33%. Crazy. And we're up a good amount on this, collecting 6% a year. My average, I'm probably getting actually around about an 8% dividend yield. On the position as a whole, I'm probably up nearly 40% on this one, and same again, still collecting a really good dividend. And sometimes it's just funny, isn't it? Because like Aviva comes out, and they brought out the H1 results, which were really strong in my opinion. On the Patreon, I covered it, and I said, it's 9 out of 10 for me, this is a very, very good earnings report. And on the day, on the Discord, there was a few people, and me included, we were messaging each other going, why has the stock gone down today off these earnings? And we're all like, we don't know. And then funny enough, like it's funny how the market reacts sometimes. Like it sends it down off earnings, and then as soon as it's gone down off earnings, like the market just goes, actually now we're going to rally off it and take it to all-time highs. It's funny, isn't it, sometimes where the market gets it wrong on the day of earnings. But yeah, another really good performer. But same again, I'm not really panicking to sell Aviva because the management team are executing to a perfection over there, and it's still 10 times earnings, picking up a really nice dividend. I'm not really in a rush to be doing anything with that stock. PayPal, wow, PayPal has woken up. We are smashing it on PayPal. This is going really well. I mean, look at the last kind of few days, 24% in a month. And what was quite significant about this jump up today, it's having another good day today actually, it broke, I'm not a guy for technical analysts or day-to-day trading, but it was clear with PayPal, every time we kind of got to that kind of $67 range even there, whenever we got to $67 range, it just went, no, I'm not going higher than that, and it just sold down. And for this time though, we have broken through. Where the stock goes to, I don't know. There was some news out there. It looks like what Alex Chris, and what a job Alex Chris is doing at PayPal as well, guys. Absolutely smashing it. We saw him mention on the conference call, like, we're having companies come to us and, like, wanting to work with us. I wonder if one of that suggestions was Adyen. They announced a partnership with Adyen, linking up their new offering, which is Fastlane, which is like a speedy checkout, and it's good to have a partner like Adyen. So yeah, it looks like PayPal is back on the top dog, and it's getting the respect on the share price. It's quite funny though, because, like, I mean, has it been like 6 months, 9 months on the YouTube channel now of me being like, these were really good earnings, guys, and the valuation is very good. This should be a lot higher. And it's, once again, it's kind of like you've had to sit through like not even a couple of months, a year of the stock really not doing anything, and then you blink, boom, and you miss it, and the stock goes on a rally. And where we go to now, I don't know, because in my opinion, this stock should be trading at 20 times earnings, which is still 20-30% higher than where it is right now at a minimum. So I still think the stock isn't that bad of a value at the moment. But yeah, it's funny because it just shows you, like, during this time frame, the stock probably should have been higher, and it hasn't. And in fact, there's time frames where people have been able to pick shares up at like $51, $58, $57. And it's a little bit frustrating, isn't it? Because sometimes, like, some people have a better average than you, even though they probably shouldn't do, because financially, it's funny in the short term that the share price doesn't follow the financials sometimes, but it does in the long term. And sometimes, some people have had opportunities to really buy a really low average on this one, and probably be making, really good money on it. I mean, I'm still making good money on it. I think like one position is up a very good amount now, and I think the other position is actually positive after today, which is really good. So yeah, it's really good to see PayPal going on a good run. I was actually thinking of giving it its own video, but I've covered it in this one, but I still might do its own video and do a bit of an updated video on PayPal. The other one that I was thinking about doing maybe a full video on again is Sofi. I was thinking of maybe doing a Sofi video. I thought I'd stick it in today's video, and then I'll see if I do another video on Sofi maybe tomorrow. But yeah, what a day Sofi is having at the moment. Last 5 days, it's up nearly 9%. It's been on a big rally in the last kind of couple of days, and once again, have that kind of sell off of earnings. It's started to like really recover after it sold off its earnings, and hopefully we see it kind of break out of what PayPal's doing and Card Factory doing, kind of breaks out of that range, because it's been stuck in that range for a while. And I said for a while, anything under $7 in my opinion is a good price for Sofi. And you look at the last earnings, the Q2 beat, the Q3 guide, where we were like 2-3 weeks ago before earnings. You can't say the stock should be valued the same as 2-3 weeks ago, because you look at the company, it's in a better place. It just reported earnings. It grew at 20-something% year over year. It also hiked up its guidance. There's no way it can keep staying at the same valuation if the financials just keep getting better and better, and the guidance keeps hiking up. Comes down to patience. Eventually the share price will reflect the financials, and that will happen with Sofi, and hopefully this is where it kind of breaks through the range, because I think Sofi's a good valuation at the moment. And Barratt Developments, this one's woke up as well. I mean, it hits a lot of the housing companies really hit the low in that 2023 time frame. You look at Barratt, it's nearly up 38%, which isn't bad for a dividend stock once again. But the last kind of couple of months, it's really starting to have a rally up at the moment. Probably a few reasons why. Maybe the optimism around the housing market coming back. People think the bottom is past us. I think that as well. Maybe there's kind of that labour element that they've kind of promised to build in a lot of houses, and people believe them that they're going to focus on new builds, and maybe that's why they do really well. But also the other thing that happened in the last kind of couple of days is the Barratt and Redrow merger. It is got its approval. It got investigated because of the watchdog and saying there was a bit of a monopoly. It seems like they've allowed it, and it looks like Barratt and Redrow will merge. Probably a good deal if it gets the cost savings that Barratt say it's going to do. It probably work out for them, and the best time to do stuff like this is normally in weakness rather than at all-time highs. So yeah, it probably should work out for Barratt Developments. It's definitely worked out for Redrow, and yeah, it looks like we could be on a good run here. Barratt Developments, I've been buying some shares in Barratt Developments, but I was really considering making this maybe a top 3, even biggest position in the portfolio. I probably won't do it now, but yeah, it's been on a good run. I'm up a lot on this position, and obviously same again, you're getting a 5% dividend yield on top of that, and that's with the cut at the moment in the weakness. Yeah, really good from Barratt Developments at the moment. So yeah, just a recap of some of the stocks that are absolutely performing very well at the moment, smashing the market, and overall it's been a good time in the market. If you're not making money in the market right now, I mean, what are you doing, guys? This is where you should be making a lot of money in the market, when it's having these sort of days at the moment, and that's what's happening for me. As a whole, I guess I still believe the market is very richly valued. Obviously it's been on a good run, and that flash crash looks quite far behind us now, and I still believe the market's a little bit frothy. I think the valuations are very high in the markets overall, but it is what it is. Some people think that there's weaker data out there. Some people are saying that the data isn't as weak out there, and that's what's kind of calmed down the market in the last kind of couple of days, is that people are going, actually, maybe it's not as bad as what that job data suggests. We'll see. For me, I just focus on the long term. When I'm buying Card Factory, I don't look at, what's going to happen in the next 6 months. I think about where's Card Factory going to be in 3 or 4 years. When I look at Supreme, when I look at Aviva, when I look at PayPal, when I look at Sofi, when I look at, they're all like, I'm not really bothered. I only talk about that because that's what you do on YouTube. You talk about what's happening day to day, when really it should all be long term. And when I look at the long term of these businesses, they're all very solid, and I think they'll do very well in the next few years. And even though they have already done well for me, I think they'll all continue to do well for me in the next kind of few years. And I guess that kind of comes to the point of view that even when I made a video not so long ago, I was saying about, I'm worried about the market, guys. But, on that video, I said, but I'm not going to stop buying. I'm still going to continue the stocks I think are good valuations. I'm still going to continue to buy them, like SoFi, like PayPal. And I'm not going to time the market. We've seen before, you look at Card Factory, you time the market, you can miss out on a big rally. You think the market, it's not going to go any higher, and it goes up higher. I remember a lot of people tried timing the market during 2020. And a lot of people said, it's only going to get worse from here when that COVID situation happened. We were 3 months in that COVID situation, and everybody went, I'm not going to buy any stocks right now because it's only going to get worse. And it turned out that was the bottom of the market. If you timed the market in 2020, you missed out on one of the biggest rallies that you would have seen in major amounts of money. I think that year alone, I think I got nearly 100% return in 2020, and it would have cost you massively if you tried timing the market. So, like I said, even though that I've been doing a few videos myself, like saying I don't like where the market is, it doesn't stop me. I have a little bit more extra cash on the side, but I still buy opportunities that I think are good value for the next 5 years, and I don't time the market. I still keep a lot of my money invested into the market because I don't know when the market's going to bottom. I don't know when the next stock market crashes, and if I try time it, I'm end up missing out on a good amount of rally, and that's certainly what we've had. And if anything, weakness, that flash crash, if you guys on the Patreon were there, obviously you guys, when that flash crash happened, you saw that, that Monday, I don't know how many stocks I was buying. It was a lot of stocks I was buying though. There was a lot of opportunities out there. In fact, I'll even show you them. You know, there was the likes of bought Melly, what a stock that's been. You know, PayPal, yeah, look at that, PayPal back at $58 on the 5th of August. I mean, where are we at right now? $71. It was absolutely insane, that flash crash on Monday. I was like, I'm buying. Sofi, bought that one, and we've just been talking about that one. Lululemon, bought that one, and I said on that post there, somehow I'm down 15% on Lululemon. I think if I remember correctly, I looked today and I'm up like 7% on Lululemon. What a swing that has been. Even more post here. I mean, look at this. Barratt Developments, we were just talking about Barratt Developments today, and you know, bought on the weakness when we had that sort of dip on that flash crash. Money Supermarket, Square, Watches of Switzerland, Wallpaint, Celsius. Yeah, it's if you're looking very carefully, you'll have I revealed that yet? No, I haven't revealed that on YouTube. You might have just seen you would have just seen the new UK stock I've started buying. For any of you guys that are very spotting that one there. But there was just opportunities, guys. So if anything, hey, you know, if the weakness does come, I'll be there buying with my cash, and if it doesn't come, I'm a winner either way, because I've got a lot of money in the stock market that will continue to do very well. So yeah, it's been a very rewarding time if you've been doing the right things in the stock market, and I'm sure most of you guys that have been on the Patreon, and hopefully most of you guys on YouTube, have been having a good time in the last few weeks. Anyway, that's the video for today, guys. Tomorrow, I don't know what I'm going to talk about. I feel like I might talk about a stock in full for a change. I might talk about Sofi potentially, and then we'll see what happens for the rest of the week. Hope you enjoyed the video, guys. See you in a bit.